So we have a lot of options to invest that have been doing very well that all compete with gold. It could be Bitcoin, the recent Bitcoin ETFs. It could be the S&P 500. It could be Nvidia stock. Whatever's drawing people's attention, they have plenty of things that are invested in that are going up as fast as gold or faster than gold, or so they're not really seeing the same thing. Whereas if you look at
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. Despite the growing demand for Bitcoin through the 12 approved spot Bitcoin ETFs in the United States, many investors still have concerns about these products and how they may affect the leading cryptocurrency network and its native coin. Critics have expressed concerns about the potential centralization of Bitcoin and the risks of confiscation in the future. However, renowned investment strategist and macro analyst Lyn Alden believes that the benefits of Bitcoin far outweigh these risks. Alden is confident that spot Bitcoin ETFs will greatly contribute to the growth and development of the underlying crypto asset and its network. According to Alden, this moment has always been inevitable for Bitcoin. Here is a quick update on the ETFs from Eric Balchunas, a senior analyst at Bloomberg. Recently, there has been a noticeable decline in market sentiment within the cryptocurrency market. However, it is worth noting that BlackRock's IBIT and other Bitcoin ETFs have been surpassing all previous records and exceeding expectations. Eric recently shared another significant achievement for IBIT and 3 other Bitcoin ETFs in a post. According to the post, IBIT gained 414 reported holders during its first 13F season, which is truly impressive. Even having 20 holders as a newborn ETF is highly uncommon. The post also includes a chart comparing the number of holders for 20 ETFs launched in January 2024. In this metric, BlackRock's IBIT, Fidelity's FBTC, Bitwise's BTB, and ARK Invest's ARRKB outperformed other ETFs by a wide margin, and lots of things Lyn Alden discusses, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
That can be part of it. I think I would add that it's foreign central bank buying and foreign private sector buying. That's the combination that's really driving gold up. You don't see a lot of U.S. buying, partly because our stock market's near all-time highs. So we have a lot of options to invest that have been doing very well that all compete with gold. It could be Bitcoin, the recent Bitcoin ETFs. It could be the S&P 500. It could be Nvidia stock. Whatever's drawing people's attention, they have plenty of things that are invested in that are going up as fast as gold or faster than gold, or so they're not really seeing the same thing. Whereas if you look at gold relative to Chinese equities, or gold relative to what's happening in the yen, for example, those markets are being drawn to gold on average faster. Which is mainly why I think you see that. I think if you were to see an earnings slowdown, kind of a more stagflationary impact on U.S. equities, and you start to see gold outperform U.S. equities on some meaningful basis, then you might get more retail domestic inflows into gold ETFs. I do think over the long term, Bitcoin is now a marginal competitor to gold. If Bitcoin didn't exist, I'd probably own more gold than I have now, for example. Whatever bucket I have for bear asset monies is now split a couple different ways. It used to be gold and silver. Now it's gold, silver, Bitcoin. There's a number of things now. I think that's around the margins that is a competitor, but it's also just all investments in general. It's hard to say because I mean that could get invalidated by the end of the day, but basically the people watching it closely significantly increase their odds of it getting approved. Probably the non-staking version. Um, and so basically the ETF holders would not get the staked rewards that basically people that are staking can get. That seems to be a potential line in the sand. I still think it's potentially a little while away before that happens, even though you could get some initial approval starting to come in. I think it's probably in the long run of time, we'll probably see an ETF for it, just because there's already futures for it. Whether that extends to other assets, I think remains to be seen. But yeah, I would guess probably in some intermediate period of time we'd get one, but it's not something I follow as closely as maybe other people follow.
The Bitcoin ETFs have facilitated access for numerous institutional investors who previously did not have the opportunity. In just the first 15 years, we are already witnessing the rapid effects on prices, as mentioned in another tweet. Eric reveals that Millennium Management LLC, a major investment management firm, has made a significant investment in Bitcoin ETFs. According to a tweet, Millennium holds about $2 billion across 4 ETFs, which is much higher than the average for a new ETF. While the majority of investors are investment advisors, hedge funds also played a significant role in the buying activity. Although it's difficult to know exactly what hedge funds are doing, they were certainly major buyers as per an SEC filing. Millennium Management has allocated around 3% of its $64 billion fund to Bitcoin ETF holdings, which include BlackRock, ARK21, Bitwise, Fidelity, and Grayscale. In total, the firm holds over $844 million in ETF shares under Black and another $800 million in Fidelity FBTC, as mentioned in a follow-up tweet. Eric observes that a wide range of institution types are included in the first 13 FS, such as hedge fund managers and investment advisors. Experts in the financial industry have been anticipating this moment since last year, and it is turning out to be even more significant than initially projected.
I think a large part of it is recency bias. And so people really tune themselves over what happened over the past 10, 20, 30, 40 years, basically the span of a career, depending on how long they've been in the space. Whereas some of the lessons of history that we can learn about the current period are things that are actually pretty similar to the 1940s, which really only you find in history books and long-term data analysis and that kind of thing, rather than anyone's
Right,
trading career, investment career. And so the
right.
types of things that, in the modern time, it's people that have managed money in emerging markets. They're often somewhat more well versed on these types of issues sometimes because it comes up more frequently. So part of it, I think, is recency bias. I would note that basically over time, from talking to institutions, from seeing some of the financial media change over time, it is becoming more of an understanding of some of the things we're going through, some of the fiscal challenges we're going through, as well as some of the things that digital assets like Bitcoin or stable coins open up to kind of the current macro situation, how they can be helpful, how they can be disruptive, depending on how you look at it. I do think there's over time there's more and more awareness for these things that I've been covering. Probably threatened to resign is the funny answer, but there's actually some truth to it. So, for example, during the pandemic, Powell called for more stimulus. So we kind of crossed the line where normally monetary policymakers don't, as a general rule, they don't really comment on fiscal policy. They try to be not kind of directly partisan. But he said, we've used a lot of our tools. There needs to be some fiscal support, right? So he crossed that line in that instance. What I would say now is that what we're seeing on the other side of it is that there's this kind of overflowing amount of fiscal hitting the market. But he's very reticent to comment on the fiscal side because he kind of goes back to the position of not really seeing that his position. But I think at this point, a central banker, if they're trying to be kind of intellectually honest about this, it's time to say it's hard to do any of my mandates when deficits are this structurally big because a central bank's tools are primarily designed around accelerating bank lending or decelerating bank lending. That's really what they're mostly geared toward. And we're in a fiscal dominant environment now, meaning that ongoing typical yearly fiscal deficits exceed the amount of new bank loan creation. And so those fiscal deficits are kind of a bigger impact on the economy in many ways than those bank loans, and they can drive things like inflation. They can drive things like nominal GDP running hot with some of the inflationary consequences that come from that. And basically, it's saying, look, I don't really have the tools to deal with what's happening there, and so if you want those mandates to be in any way met, there has to be a fiscal response. And so right now, it's kind of politically acceptable for central bankers or treasury officials to say, look, in the long run of time, yes, there's a fiscal issue, but but then they always caveat by saying, we still have plenty of room. No one's going to admit that the actual road is kind of running into issues under their watch. And I think that there needs to be more transparency around that issue. So I basically would say, look, if you want me to be able to do my job, you need to rein in yours a little bit. Otherwise, I would resign and say, look, you put in a position where I can't meet my mandate because I don't have the tools to meet my mandates.
In her previous interviews, Alden frequently discussed a concerning situation involving elevated levels of inflation has become a common occurrence in the lives of Americans, as it is for people in Egypt, Nigeria, and Venezuela. A well-known financial analyst predicts that this grim future could be just 5 to 10 years away. Allen is confident that even those who currently doubt it will have no option but to embrace cryptocurrencies like Bitcoin. Do you share the belief that Bitcoin has the potential to eliminate centralization and create a fair playing field for everyone? If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.